Hi guys, it's Ted here. I just wanted to take a few minutes to take a look at Apple again. It's one that I've talked about a little bit in the past, but with any really good company that you want to follow over the long term, you should constantly review it, take a look at it, and then if the price is right, then maybe you can decide if it is worth investing in. So Apple has had its price come down significantly along with many other companies in the market that you've probably been following here at the end of 2018. So a headline that was big today was that Apple was hit with a sales ban on iPhones in China. It was hit with an injunction, so you can read this article on many different news outlets, but this one's the Wall Street Journal talking about a Chinese court that has ordered Apple to stop selling certain models of the iPhones. I thought it was all models, something I'll have to double check, but new models were not included in this because they were not available at the time of the sale, of the court filing. I stand corrected. But so anyway, this is a problem in China, but in my opinion, this is probably historically a blip because obviously Apple is going to deal with this. They have very strong legal teams all over. Like this legal war with Qualcomm is not a new thing. It's a huge thing that's been developing for a long time. So I'm sure this is not going to halt sales in China permanently. That would be a huge blow to Apple. And I think the market knows that. I think the last time I checked a minute ago, the stock price was probably flat for today, being the 10th of December. So anyway, it's not great, but it is something to take note of. And maybe it's something that has developed more recently, or the market has taken note of and seen the price come down quite a bit. But with technology companies coming down, like the so-called FANG stocks, coming down for various reasons, Apple to me has always been relatively lower priced. I mean, if you look at the price to earnings ratios and things like that, other valuation metrics, it is far cheaper, especially for a profitable company, than most other technology companies that you might look at that might just get lumped into this FANG category. So let's look at some real fundamentals. What does this business do? How healthy is the company financially? And then you decide for yourself if this is something you want to invest in. So here I am at the Guru Focus main page for Apple, and you can just see this right here, this big drop off in the stock price over the past couple of months. So, I mean, yeah, at $168 per share right now, it's come down to the lows of earlier this year. And that doesn't obviously mean that it is lower relative to earnings. So that's something we have to look at, earnings and revenues and things like that. So let me scroll down just a little bit because I want to highlight this. This is very important, where you have a lot of free cash flow, net income. It's all positive, and Apple's cash position is not where it was at maybe a year ago. But still, this is something, it's because of the buybacks, because of dividend payments and other investments that they've been making. So this is a company with high margins that you can see right in here, operating margins and net margins well into the 20s. And so not losing money like a lot of other tech stocks, quote unquote. Okay, so let's just go into this interactive chart. So this is something I just want to show you really quickly. The Peter Lynch chart essentially, but I like to use the median value just because it takes into account, it's more specific to that company and how it has been viewed historically, I guess by the market is the simplest way to put it. So let's just go back 10 years. You can see here that there have been dips with Apple for various reasons, and this one in 2016 here. So this was, again, a lot of the same things being said in the news, that sales in China are going to go down and it's not going to be able to compete because it's too expensive. And yes, these are all real problems that China or Apple has to deal with in China and in other foreign markets. But I think it's obviously something that they're tackling and they're well aware of. So, and Apple is just not going to be a company that falls apart in the near term. I think it's going to be a company that'll be around for many, many years. So let's pull up the price to earnings value here as a median. So going back 10 years, you can see this right away. So it is below, it's dropped below the stock price where it would be historically just based on its median price to earnings. So the last time, again, like I said, it did that was in 2016 with a lot of that negative news. So here, if you want to base it just off of that, it probably is a good position to start buying. And I'll be thinking about this strongly before I make a decision. So that doesn't mean there isn't more room for it to fall and to continue to go downward into closer to 150, which, I mean, that would be a long way to go. But it is possible. Anything is possible in the market. So if you did decide to buy now, then you may just want to initiate a position and then just continue to buy at cheaper prices, or just go in now and just wait for the long term, right? Because that is, to me, the most important time frame to look at is just long term. I don't see Apple going down in any sense. And at this price, I think it is a good deal. But let's look at the discounted cash flow calculator. So, okay, this one is heavily dependent on what you think growth will be in the next 10 years. And so one of the big assumptions here is that growth should somewhat follow what it has been for the previous 10 years. So with companies that are new, this is something you really have to be careful with, because it's not really going to be historically accurate for something like Facebook that's only been, it has a much shorter history, let's say, than Apple does of selling their hardware in their different categories and things like that. So Apple has a history of being able to grow its revenues at a significant pace. And again, that doesn't mean that this is guaranteed to continue to happen for the next 10 years, because a lot can happen in that time frame. But here you can see these numbers. So going back 10 years, you're well into the 20% growth rate for earnings and revenue and free cash flow and all of that kind of stuff. And then you go back 12 months just to see how it's done in the recent past. It's pretty similar, actually. So the growth it hasn't been a slow year of growth for Apple when you look at it historically. So to me, that's a very strong indicator. And so in the calculator, if we scroll up a little bit, it assumes a 20% growth rate in the next 10 years, which is pretty ambitious. So you might want to decide if you think 20% is achievable, or if you want to do something more conservative. But again, I just leave that because that is what the calculator sees as likely, and that is the assumption that we make. And then you can change the other variables as well that you should look into to just see what they are, the discount rate and stuff like that. And a lot of times I like to add the tangible book value, especially here where it's positive and there is a lot of cash on the balance sheet. And it gives us a better fair value of what this company is worth. So you can see $360 is, according to this calculator and these calculations and the assumptions, $360 is a fair value. And if you get it for less than that, obviously, that is a good investment. And a margin of safety of 53%, so over the 53% that Ben Graham always looked for. I mean, it's hard to be wrong about this, I think, at this price. So, and that is what the point of the margin of safety is. So you don't have to be perfectly accurate about your growth rate or what you think phone sales are going to do in China in 3 years from now, which to me, in my position, is impossible to predict. I leave that to the experts at Apple to figure that out. And Nobody better qualified to figure that out than they are. So let's even lower this, all right? So put something in there like maybe it's only going to be a 15% growth rate in the next 10 years. And again, it gives you a margin of safety of 37%. So that is some stuff that you can play around with in this calculator, and something that I'm looking at. So I just wanted to share this. Obviously, there's way more information, and I think you really need to do more research on Apple, and if you're going to invest right now. But this is a good opportunity, and I'm just going to switch over to this article. Sean Chandler at Seeking Alpha has put out an article today. Historically, this is an extremely rare buying opportunity for Apple. I think he might be right. I'm going to be doing my more research to decide what I want to do. But I think he's right. So take a look at this article. I think it's a very well-written article at Seeking Alpha. And if you're interested in Guru Focus, take a look at the link below. I use it every single day to do my research. It's an amazing tool. Tons of data in there. And I hope you found this helpful. Hope you have a great day, and bye for now.